The next day, it triggered a buy order as price traded above the high of the breakout candle. However, it failed to give a big move on the upside and resulted in a dodgy candle. Remember, our criteria for a breakout is that the price should give a big move in quick time with the absence of selling. Hence, it does not make any sense to retain the original stop loss. It's better to trail below the low of the current day candle as shown in image 4.8. However, this time price didn't hit the trail SL and went upside. In the worst scenario, the smart money will show their reaction within 2-3 days after the breakout. In this way, we reduce the initial risk. Now, we will look at one more example. If you look at image 4.10, we have a clear all-time high breakout trade. Breakout candle is big, quick time, absence of selling wick, good volume. It satisfies all our checklists. Hence, we will place a buy order tomorrow above the high of the breakout candle. If triggered, the stop loss will be below the low of the breakout candle. The next day, it triggered our buy order as price traded above the high of the breakout candle. However, it moved only a little bit on the upside and resulted in a small bearish candle. Remember, our criteria for a breakout is that the price should give a big move in quick time with the absence of selling. Hence, it doesn't make any sense to retain the original stop loss. It's better to trail below the low of the current day candle as shown in the image 4.11. This time also, price didn't hit the trail SL and went upside immediately. Note, I can give many examples of this concept. However, I feel these three scenarios are enough to convey what I'm trying to say. After showing a breakout, rarely does a price witness significant selling. In most cases, it will rally on the upside immediately or go to sideways mode and then rally on the upside, or will slow down and then it will fall. I'm trying to minimize our losses by 75 to 90% if it fails to give a big move on the upside. How to take your exit to the next level? I repeat once again. Only entry and exit decide the fate of your trade irrespective of your reputation, experience, and qualification. I have noticed that many traders learn quickly about entry, but when it comes to exit, they struggle a lot because every time exit will tell you whether you made profit or loss. In both cases, it triggers many emotions. So one should have a proper plan towards exit. I suggest below 2 steps to manage your exit. Step 1. As per the plan, images 4.1, 4.2 and 4.3 for a downtrend, sideways and all-time high respectively, exit 100% of the position at the target level. Follow the below steps for a few months until you can manage your existing trades. This method involves many activities. Search breakout scripts every day. Shortlist 2 to 3 scripts for the next day. Don't try to keep more than 3 scripts on any trading day. The next day, when the market opens, place an SLM buy order above the high of the breakout candle for all the scripts. If it opens with a small gap, less than 2%, then you can buy at market order. If you bought, keep a stop loss order below the low of the breakout candle. Again, after market hours, search for breakout scripts. The next day, once the market opens, keep stop loss for your existing positions. Then you can place an SLM buy order for any new scripts. If you get a small candle or a selling candle after the breakout, trail your SL from the low of the breakout candle to the low of the next day candle. images 4.4 to 4.12. When the price reaches your target, either exit manually or you can place limit sell order to close position at the target level. Maintain a trading journal. Write all your trades here. Analyze the failed trades. Only after you're familiar with the process mentioned above can you plan to implement this step. It contains all the procedures which are mentioned in step 1. The only new thing is, instead of exiting 100% position at target, exit only 75% of the position at target. Carry the remaining 25% with a trail stop loss below the low of the target day candle or below any swing low. Many times, these breakout scripts run like crazy and 25% of the position in one such trade has position to absorb the loss of your 25 trades. The above image explains everything about the power of partial exit. You will have made an excellent profit if you keep using the trail SL concept below the low of every swing. The image 4.14 explains the same story of partial exit. It would have given 5 to 6 times the returns of your original risk for your 25% position. The image 4.15 explains another story of partial exit. It would have given 8 to 10 times the returns of your original risk for your 25% position. I hope that after seeing these examples, you have understood the power of partial exit.